and the direction of travel, perhaps for the rest of the week. Um, Markets have opened a little bit up this morning. I would say ultimately little change might be the appropriate language. They opened first down and then bounced up a few pennies. But ultimately, after a big move yesterday, downward over $2. Let's kick off this morning with Dr. Carol Knackley, our CEO of Crystal Energy, a regular Thursday morning commentator. Carol, I'd welcome your thoughts on the volatility that we have seen come back into the markets. I mean, this week is probably a signature week in which oil prices went above $70 a barrel on Tuesday, and then on Wednesday they dropped down to 60 or towards $66 a barrel. We also saw yesterday with Bitcoin in the morning, it dropped a whopping 30+%, and in the afternoon it recovered a whopping 30+%. So I'm wondering your thoughts on what all this volatility means.
Good morning, Sean. Good morning, everyone. Well, look, since the beginning of the year, I would say, or probably maybe towards the end of last year, December onwards, volatility has been the name of the game. So we're continuously talking about fluctuations. Of course, we always have fluctuations when especially with commodities traded internationally and on various markets. But the range within which that volatility is increasing has become more pronounced, I would say, recently. So nothing came as a surprise in terms of movements, but that this changed the overall trend in oil markets in particular, or even on the global economic front, I doubt it, because mind you, yes, prices may have briefly broke into what has been a cap for a while, that is $70 a barrel, but actually you shouldn't forget that they have been trading above $60 or maybe around an average of $65 a barrel for the last few months, and that by itself is an achievement compared to the last year. So usually, historically, if you look at prices, how long it takes them to recover after a crisis. And what we saw last year was a massive crisis. It would take them at least 18 months to go back to pre-pandemic or to pre-crisis level. And here in almost less than a year, they are trading at levels that we saw before the pandemic. So that by itself, major development, and OPEC Plus takes most of the credit. So we shouldn't really let these day-to-day changes in oil price distract us from the bigger picture that oil prices are trading at healthy level, especially compared to the pre-pandemic or the pandemic levels.
Let's welcome Walter Simpson, Managing Director of CCED, sitting in Oman. Walter, we had been talking in recent months, and Carol mentioned it, essentially weeks in which we were kind of glass half full weeks, and then weeks in which we were kind of glass half empty. This week, it seems like every day is a different sentiment. I'm wondering your thoughts on that. Is that a shift? Is that a one-off? And what does it mean for an operator like yourself?
Good morning, Sean, and good morning, everybody. Yeah, look, we're happy in it, and I don't think this week's any different, if I'm honest. I look at it and go, okay, so what have we got? We've got some positives out there that people are seeing, and we've got the positives in the economies in the US and Europe. They're starting to open up a bit, and it's hesitant, but they're starting to open up. So you're starting to see that positivity in the market from that. You're getting the benefit, as Carol mentioned.
Tuesday.
Well, yes.
I mean, in terms of that sort of sentiment of positive.
Yeah, it's definitely there, and then you've got the positive of OPEC, that they've been consistent. The compliance has been good. They've been measured, and they've been able to control the output. So that's a positive. And then the negatives that come into it, you've got the fact that there are still clearly problems with COVID in Asia. India, a tremendous example, and other Asian countries are starting to put restrictions in place on the back of this. So you've got that. You've got the fears over inflation in the US, and that's starting to get people a little bit nervous. You've got the Iran talks going well, so is Iran supply going to come back to the market? And then you've got, I think, the potential for the profit taking from the hedge funds as well, which I saw an article about this week. So I think it's that balance that's going on, and it is half full, half empty almost every day. Do I think the price is about right? I do, and I'm happy with that, and I'd like it to stay where it is.
certainly not to expand that volatility. Instead of being a $4 or $5 swing over 2 days, it would have swing out to 10. Robin Mills, CEO of Camera Energy. I'd welcome, Robin, your weighing in on this theme, and also from the point of view of calling this moment. Are we in some kind of moment in which the markets are topping out? Is this, on the oil side, we keep hitting our head on 70 and bouncing back down again. Is this a moment in which the momentum of the last 6 months has run its course?
Yeah, look, I think I see the 70 level as a bit of a ceiling for the near term. And just to echo Carol's comments, this is an achievement by OPEC and by OPEC Plus to get prices where they are after coming through such a historic crisis. And indeed, still we're far from out of the crisis so far. Demand is still far from returning to pre-pandemic levels. But that is really a function of how tough OPEC has been on the production cuts and on the compliance. And we see this month again that OPEC compliance and OPEC Plus compliance as a group is well over 100% still. If they stick to those level of compliance, then of course,
I just want to make a note on that, Robin, to interrupt you. Sorry, just because I think it's important to just slightly clarify on that does include the 1 million barrel unilateral Saudi cut. This sort of reporting of, I think yesterday, 120% or something like that. Was that a Reuters survey? I can't remember. But ultimately, inside it is a unilateral 1 million barrel a day cut. Most non-OPEC countries are not complying.
Yeah, true. But, the non-OPEC countries are complying at about 92%. Now, if you go back historically, when OPEC, the core countries in OPEC, their overall compliance cuts typically be 75%. I think getting 92% out of the non-OPEC, and with Russia as a major one of those not fully complying is still really quite an achievement. I think that would surprise people from going a few years back. So it really depends. Going through the next few months, these price levels. OPEC has laid out a scheme of production increases, as we know, 350,000 barrels per day extra over the next couple of months. And if they stick to that, that's the return of oil on the market will tend to prevent the prices jumping over the $70 a barrel limit. Obviously, we've got a few other factors. We have these continuing worries over demand in Asia. We have the potential of Iran supply returning, as has been said.
Carol, the drilling down into the sort of glass half full, glass half empty points. It seems like this inflation issue just won't go away, no matter what the Fed keeps coming out and tries to hit it with a hammer down again. Again, the markets reacting yesterday to concerns of comments that came out of the Fed notes, signaling that there is conversation starting about tapering. Clearly, the markets get very nervous about anything related to acknowledging inflation.
Yeah, and we also take part of the blame because we've been talking about it so often. You talk about something all the time, then it may become a reality at some point. So definitely the fears are there. I wasn't terribly surprised, nor the market reacted tremendously to the publication of the meetings from the Fed, because when you look at those meetings, they say at some point we have to do something about it. So it wasn't really a strong fear. But in addition to the economic rationale, there's also, I was following the news in the US, the issue is also being politicized, with more the Republicans hanging on this issue to attack Biden's policies, for example, additional putting more money into the economy. So there is some economic reality, and the banks are saying, the Federal Bank of the US saying that no, it's not there. It's yes, and mind you, they warned us already that prices are going to heat up, but they believe that is going to be temporary. Of course, we have to wait and see what is going to happen, but definitely the market is nervous, and but the more people talk about inflation fear, the more this is likely to happen. But meanwhile, it's going to add to the volatility in the market. Maybe we could.
I don't understand this point they keep making. Sorry, temporary. That this inflation thing we're going to ignore because it's temporary. I mean, policymakers are there to react to market dynamics. And obviously, if it's only temporary, they can obviously adjust at some point in the other direction. I mean, these are massive price movements we're seeing across all the commodities. We saw reports out of the UK yesterday, a 4% jump in inflation over month to month. I mean, these are not minor data points.
They are not minor data point, but you have to think about the base from which they are increasing. So that's one thing to keep in mind. And that's where I subscribe to what Powell, the chairman of the US Federal Bank, said maybe last month, that it's a rebound, not necessarily a recovery. Actually, he didn't say necessarily, he did say it's not a recovery. So he was quite confident. And mind you, for the central banks of the US, they are focusing on full employment. So we had mixed signals because, mind you, the last job employment in the job report or job market report from the US disappointed. It wasn't as stellar as people expected. So we're getting mixed signal that supports the central bank's reaction. This is a rebound. It's like when you hit a ball against the wall, it comes back quite strong, but it doesn't mean it's going to maintain its speed. So the economy in the US, and this is where the central bank has been focusing its effort, is on full employment, not really necessarily on inflation. Of course, they keep inflation in mind, but that's what they use to justify their rationale for it being a rebound, not a recovery.
Walter, one of the things, of course, that is over the oil market is the issue of supply-demand balance. OPEC Plus is in the process of increasing supply this month, 700,000, and again next month, a 3-month cycle that adds up to 2 million barrels. And one of the sort of beneficiaries are that allowing that to happen and support the market is the fact that shale is not really increasing. It's the higher cost producers are not coming back into the market at these levels, allowing Middle East producers like CCD and all of the big actors in the region to continue to produce and expand production.
Look, that's true, and that's why I'm very happy with the price where it is at the moment. I think if it does start to creep above the 70s, then I think you'll start to see these marginal producers in the US starting a hard look at what point do we come back in. So I think
does that create any reluctance on the producer side here, you and your peer group in the region, to maybe not quite take the leap to add new capacity when you know that there's 2 million barrels in America that could come on at any point?
So if on a personal level, no, it doesn't, because we're not big enough to have an impact on that. So sure. No, but I think it's definitely part of the consideration that the Saudis have in their considerations about releasing the volumes that they've voluntarily taken. And I think OPEC Plus, when they discussed their increases over the few months coming up, that they were considering that too. I feel myself as though the price range we're in is about right for them. It works for us. It works for the countries in the Middle East. I think they're happy to keep it there, and they'll do their level best to do that and try not to encourage that shale oil to come back in.
Robin, of course, the real tangible barrels that might be heading the market's way are from Iran. We have news overnight as I think the 4th round of talks were concluded with the words that a deal, an agreement is within reach. Your thoughts on what's happening in Vienna and its ramification for the markets?
Yeah, I just want to pick up that in the context of the previous point. Look, I think OPEC, has got something to do to be cautious, and that's partly why they've been cautious on bringing back production themselves, because of the thought that Iran, obviously, as being outside the OPEC deal currently, may well return and put another 1.5 million, 2 million barrels a day back on the market in a relatively short period. So, that they have to leave a little bit in the back pocket in the case of that. But I also just want to pick up on the shale point. Look, I think there's always a lag between the shale producers seeing a higher price and responding. That lag is a bit longer now because everybody's telling them capital discipline. But if we get a few more months at $70 a barrel, then I think that capital discipline will disappear, and plenty of companies will be back to drilling. And I think you'll see a strong surge in US production if we stick at these price levels. I think OPEC, again, needs to be very, very cautious on that. But just to return to Iran, yes, I think we're seeing the past week or so some more positive signs out of Vienna that they've overcome some of these barriers and that we're getting much closer to a deal. It's been pretty tricky, and there's some controversial issues, particularly relating to the sanctions that were imposed supposedly as a result of terrorism under the Trump administration. A lot of these were clearly just designed to, and the Trump administration was quite open about this, to create a poison pill for a future return to the deal. Because now Biden's in the uncomfortable position of having to say, no, these entities that were previously designated as terrorists aren't, and then opening himself up to charges of being soft on Iran, soft on terrorism, which will all be bad faith charges, brought by his political opponents and opponents of the deal, but inevitably people will do that. But I think the signs we're getting are that they're getting much closer. We're getting signs from various participants in the deal. The Russian diplomat who perhaps got a bit ahead of himself, but he was suggesting they were close to a deal, and the Iranian representative as well. Now, I think it'll take a while for the supply to come back when the deal is done.
Do you think there is an urgency on getting getting to an agreement ahead of the Iranian elections? Because after that, who knows what might happen?
Yeah, I think there is on the US side, and and obviously the Iranian side. The Rouhani administration would like to come away with a win. The clock's really running down on that. But if they had at least some kind of positive, of course the deal wouldn't do anything before the elections. But at least if they had a deal, it would salvage something. We're starting to see the shape of the candidates, the Iranian election emerging. So I think there is an urgency on that. But look, inevitably a lot of the work on this will have to be done with the new Iranian administration, whoever that is. And I think there's a lot of thought that the hardliners can do a deal because they're more aligned with Khamenei and so on. I'm not so sure about that. I think the last deal took a lot of expertise on the Iranian side, a lot of flexibility. I'm not sure the hardliners will be so willing and able to show that.
And I suppose they also have to be conscious that Biden needs political cover. This is a delicate chess game that he has only so much wiggle room, and they need to be aware of that. Dr. Carroll, I have to say, for your pleasure, I put in a great story on Lufthansa Airlines in the Daily Digest today, with bookings to the US growing by 300%, according to their reporting. Speaking of one day to the next, I'm kind of a bit confused. Is Europe a positive glass half full story, or is it India COVID variant spreading, spoil the party story? It seems a little bit uncertain at the moment.
Yeah, for Lufthansa's a surge in demand, I'm not contributing to that, but definitely you see this kind of vibe across Europe. Every time I talk to a friend in the UK, they tell me they are going away. They already booked their holidays for the summer. And also here, in France, in Germany, people are making holiday plans for the summer. And here in Europe, I think yesterday they were discussing opening up for tourists that are fully vaccinated, but particularly from countries where you have high spending power. So really the rich tourists who would come and support the growth in the economy. So it's quite well targeted policy that they may enact here in the EU and in Europe in general. But again, you see it's a little bit too early to tell, because it's not necessarily that where you open your doors, but also what could happen afterwards, the spread of the variant, the speed at which vaccination is happening. And that's why if there is any kind of boost in international travel, it's likely to be constrained between or limited between key regions, for example, between the Europe and the US, because the US may not be on the white list, but most of the people there are vaccinated, and that increases their trips, for example, the probability of coming to Europe. But overall, maybe the summer may not be as exciting as many are expecting it. At least a few months ago, we expected a boom in travel. And again, we are still well below the levels that we saw in 2019. We may be more than double the level that we saw in 2020 year on year, but we are still, I think, just around 60 or 65% of the flights, commercial flights that we saw in 2019. So we still have a way to go. And yes, I wish I had more exciting news, because I'm desperate for this news to tell you that the glass is actually full. But as long as we have the virus not fully under control, mutating and spreading like crazy in key countries such as India and other parts of Asia, I feel this will continue to be the mantra of our discussion for the next weeks, if not months to come.
Walter, clearly the European story is one of recovery. The Asian story, at least from a China point of view, is business as usual. Yes, there's noise around the edges, but demand remains quite solid in China. Throughput on refinery levels up around 14 million barrels a day. It's still a solid story there. And of course, most of the oil from this region is heading in that direction.
Look, it is. I think, yes, there's noise around the edges, but China's definitely, well on the road to recovery. I think the concerns are really around India and the other Asian countries, and India particularly is not a good place at present. So I think there still are real concerns about the rest of the region and what's going to happen there. So yeah, not out of the woods by a long way. I think we're going to be talking about this for not weeks, I think months yet, to be honest with you.
Cargo's moving across from Oman, obviously, and quite a majority of your crude in Oman goes to China. Any drop off there? Is everything fully moving? There's no interruptions?
No, everything's moving fine at the moment. No issues whatsoever. I'm very happy with that trade, to be honest with you.
Yeah, it does seem to be one very much locked in. Let's go to the survey question for today and get the room's view on some of these issues that we're talking about. Again, this question might take a moment to put down your phone and actually think a little bit. We're seeing a lot of volatility come into markets. Oil up above 70 on Tuesday, down towards 66 on Wednesday. I mean, when I was covering the oil markets as a journalist, that kind of move would have been front page, above the line, headline in the New York Times. I mean, they're historically very big swings, maybe not these days, but we also Bitcoin do the big 30% swing. And the question is ultimately why, what's happening? Options, markets topping out after a big run up. 2, inflation fears. 3, post-COVID demand boom is not arriving. And 4, the markets are simply taking a breather ahead of the next run higher. So
I was looking for a fifth answer there, Sean, which was all of the above.
I'm afraid we don't do all of the above at Gulf Intelligence. That's McDonald's next door. But nonetheless, inevitably, it's all of them. But which one do you think is feeling, might be the bigger one? And certainly moving forward, rather than looking in the rearview mirror, which of these might be determining the direction? Robin, your thoughts on where the markets may move going forward? The volatility does seem to be becoming the vibration a little bit, more pronounced. This week is anything to go by. Where do you things go from here, and what do you think guides it? What is the more significant impact?
Yeah, I mean, it's kind of funny, I think, Sean, on your little poll there, we're kind of relying on Bitcoin as an indicator of the health of the market here when, I mean, the whole market.
We've had voices at this table who have indicated that Bitcoin has been a barometer for kind of bullish optimism. And that while without sort of getting into the granular of what Bitcoin means and so forth, but ultimately it signaled people were willing to risk capital.
Yeah, if anything, it's a barometer for a great wave of money washing around the markets, not knowing what to do. But I'm not sure it's a barometer for anything more than that. Okay. But where the oil market is going is I think tells us a bit more about the fundamentals. And I think we've seen that we've had a strong run up. We're now bumping our heads against 17. We'll bump our heads against that for a while until there's a catalyst to go beyond it. And I think but I think one of the points on your survey there was the post-COVID demand boom not arriving. I'm not sure about that. I think definitely in some places we are very much seeing the boom arriving or just about to arrive. Carol was just talking about travel, but we've also seen a huge boom in physical.
I mean, is that baked, do you think, in already, Robin, that demand, that driving season in the US, the flying from London to Spain, that has to happen now to keep these prices where they are, not to move them higher?
Yeah, to an extent, but to where, but it also depends. Will we be surprised? Will we see an even stronger demand? Because the demand for physical goods has been extremely strong, and we see that in in all the physical commodities. We see it in things like copper. We're seeing it in timber because everybody wants to try and do house improvements while they're stuck at home. We're seeing a very strong gain in physical goods, and that, of course, is supportive of the oil market as well. When you talk about transport demand, you talk about shipping fuel, you talk about diesel for trucks. So that complex has been doing very well for months now.
Carol, one of the things we've been sort of monitoring is the impact of this sort of growing microchip shortage as a barometer of many other shortages, but this one seems to be one of the more pronounced. We have a story in the Digest today, news out of Toyota closing down 2 plants in Japan due to chip shortage, that the capacity of the market to handle this surge in demand is proving to be difficult, and with it, the inability to deliver economic growth.
Yeah, I mean, these supply chain bottlenecks, they kind of were expected because, mind you, there are lots of also not only the boom in demand, which definitely is playing a major role, but also you have new regulations that are also slowing down, let's say, the processing of orders, the deliveries, etc. So together they are creating this kind of supply bottlenecks. And here, for example, in Germany, some suppliers have stopped taking orders because they cannot secure delivery, let's say, before at least 5-6 months, and even then they are not sure about it. So a lot of uncertainty ongoing at the moment because of, yes, a strong rebound in demand, but at the same time, you have to also think about the regulations related to the safety regulations and the bottlenecks around the world, which has also impacted the deliveries and the supply. So that would translate into higher prices, but I don't see it as a lasting problem. I think it's a question of time before it gets resolved. If you remember last year, what everybody was worried about was the rollout of vaccination because, you know, you don't have enough this, enough that. This seems to be easing. And before that, they were talking about the safety gear. So these kind of supply chain bottlenecks, they get resolved, they take a little bit of time, and they translate usually in higher prices, which in turn can support, you know, supply and dampen a little bit the growth in demand. But if I may add one thing about the demand outlook, you see,
Please.
Something that's strange that we did not talk about two important things in this conversation as we talk about the oil market. We've been, of course, focusing on demand, which is the main story, and has been a demand shock, definitely. But there is the issue of inventories, commercial inventories, and there's the issue of OPEC spare capacity. So while the former may have been resolved for now because you brought them down to the 5-year average, but I think we should be more and more focused on OPEC historically high spare capacity, because that, you know, you have to think about whether demand growth will be strong enough to capture more barrels coming to the market from OPEC as well as from private producers such as in North America. This is what I'm looking for, and I'm looking, you know, closely, watching closely, not just these daily movements in prices.
Let's get the survey result and give Walter the last word. So 43% post-COVID demand boom not arriving, 27% market topping out, inflation fears, and very few in the room thinking that the market is taking a breather to run higher. Walter, I'd welcome your thoughts on moving forward and the bottleneck concept as we come out of COVID. I mean, one of the great sort of parlor games here in Dubai at the moment is, where can I travel to? I want to spend my money, but to go home to Ireland, they don't recognize Sinopharm. You have to have a COVID infection rate that's under 75 per 100,000. I mean, ultimately, these are obstructions to travel. And we have the microchip issue. So my question to you is, are these bottleneck issues, these vaccine passports, et cetera, could they create a problem for production? You know, you've got a drilling rig, a team that's got to go into a field. You've got to get talent from parts around the world. How is it likely, or is it yet? What's your thoughts on that possible squeeze on operations, which amazingly, in the year that we've had, most of the region's oil producers have managed to meet all of their production targets?
So undoubtedly, it's a challenge, and I think, you know, all of us who are living away from home are facing the same challenge as yourself. That you can't get home at the moment, at least not easily. It's a major effort, and then you possibly can't actually get back. I mean, if I left Oman, it'd be very difficult to get back again. So it is a challenge. But what I'm being encouraged by has been the inventiveness and the creativity that's allowed people to overcome those issues. So as I said, I think in previous talks here, we've managed to use remote working in ways that never dreamt of before, but didn't think would be effective. And it has been effective to get the skills that we need to be able to overcome that. You can't physically get the person in. Now, that clearly there are some limitations where you actually have to have the person on the ground to do the work. But in most cases, we've been able to overcome that. And so I think that's how it's going to be managed. I think the problem will continue. I think travel will stay restricted for a while to come. As you say, with passports, with recognition of vaccines, it's going to make it difficult for people to move. And there'll be a reluctance as well for people to go to certain countries, I think, for work reasons. So I think there will be that problem in the future. It will continue, but I think the creativity of working practices will overcome it in most cases and manage to overcome the problem, which is what I've seen so far.
Well, one of the outcomes of the microchip story is the US government putting together a budget, I think somewhere in the region of $100 billion to incentivize local manufacturing of microchips in the US. The idea that you can't get access to the talent or to the resource, you've got to start producing it yourself. And perhaps that's why Omanization, Saudiization, and all of these other things within the energy industry in the region might become increasingly important. But anyway, that's...
Sean, if I just add one thing, which is a point I put in the chat room, that for the EU, so far the discussions are that, and I don't think this is good news for you, because if I'm not mistaken, you received the Chinese vaccine, that to travel to Europe or to the EU, you need to be vaccinated by an EU-approved vaccine, and that narrows down the scope for where countries can travel from or to.
Absolutely. I mean, these are all sorts of the hurdles that are going to make the emergence out of COVID disruptive, because everybody will be at different speeds and different regulatory authorities and guidelines. But that's a wrap for this week, as markets trend up a little bit this morning out of Asia, having a turbulent week. I'm sure there's more bounces to come before Friday close. But thank you, Robin, for joining us from Dubai, Carol from Germany, and Walter from Oman. Have a great weekend, everybody, and we'll catch up on Sunday. All the best. Thank you.
Thank you. Bye-bye.
Thank you.